How's it going, everyone? It's Sam. We are doing the next installment. I believe it is the 14th installment or 15th installment of the weekly dividend series. Now, I'm going to show you what I bought this week in this portfolio, the $100 a week, also in my Roth portfolio. And I'm going to show you the difference between what a small portfolio like this, a $1,500 portfolio, could yield and what it would give you in dividends versus 15,000 versus 150,000 versus 1.5 million, and kind of your monthly income that you would be looking at from a portfolio just like the one that I've created here. So if you guys like this kind of thing, please leave a thumbs up. I really appreciate that. Also, if you want to join me on this journey from zero to $1 million portfolio, you can do it just using the link down below with M1 Finance. You can use the same exact investing app that I'm using. It's very low slash no cost, and it's a great company to use for this kind of dividend reinvesting. So if you want to start that, we are doing $100 a week. You can follow us along the journey. Now, I am not alone in doing this. Logan Fisher is investing $25 a week, and JT Wealth is investing $50 a week. So I'll put their links in the description. You should definitely check them out too. So let's get into what I bought this week. If we take a look at this portfolio now, we're up about 10% so far, which is a good return. If you scroll down, you can see that our largest position is Foot Locker. After that, we have Disney, JP Morgan, Realty Income, Store Capital, IIPR, AT&T, SPHD, and Qualcomm. We have some monthly dividend payers and we have some real estate stocks, but the majority of our stocks are up right now, especially when you account for dividends. So that's always nice to see, but over the long term, that won't really matter as much. We're going to be positive after we invest for long term anyways. But this week we had two buys. We had Store Capital, which I've talked about in the last couple of videos. They are a real estate investment trust, and I think that they offer a lot of value because they invest in companies or they have tenants that aren't investment grade. So what's that mean? That means that they are not the Home Depots, the Starbucks of the world. These are companies like maybe Ashley Furniture that maybe you've heard of, but they're not the highest grade tenants. They're not these massive multi-hundred billion dollar companies. These are companies that will work with Store Capital a little bit more. They'll show how much each store is earning. They will pay a little bit more for rent. This is going to be something that really helps Store Capital over the long term because they will be able to get a lot higher profits from these companies and be able to just be a lot more secure and be a lot more profitable. The other company that I bought is Disney, and I've talked about them before. They are transitioning from hospitality business to a streaming business. When you look at the multiples for what Netflix sells for and then compare that to Disney, Disney is very cheap. And everyone's looking at the fact that Disney's parks are down, they're laying off workers, but I think long term, Disney is going to be a great company who hopefully will be able to continue to grow the subscription service and make it more of a subscription-based business model as opposed to a hospitality business. So I think that this is a great company to invest in. Now, I did buy my other portfolio too. I'll just show you it here real quick. Our portfolio is sitting at about 16,000, and I was able to reinvest dividends into Store Capital. So same thing as the other portfolio, I bought more Store Capital. Now, if we take a look at just the dividends that we've gotten recently, just over the last month or so, $3 dividend, $3.80, 58 cents, $1.57, $5.76, $17. We're getting nice dividends in this portfolio, and this is what you really want. You want to be able to reinvest your dividends back into the companies that will pay you more dividends, that will be able to reinvest back in the companies, and it's just a snowball effect. And I haven't seen this huge snowball effect yet in my portfolios, but I know a couple years down the road, even maybe 10 years down the road, these companies are going to probably be investing close to as much or more than I am in the portfolio. So that's going to be a real turning point where I am just hands off and I can just let it snowball down the road if I want. Now, I realize that our portfolio is not huge yet. It's in just under $1,500, but I want to show you what a larger portfolio would look like, how much time it would take, what kind of dividends it would be spouting off to you. So if we go over to the research section, we can take a look at my pies. And if we go down to the dividend income and growth, which is the portfolio that we're investing $100 a week, you can see the dividend yield is about 3.62. Now, after you take out expense ratio, it's about 3.6, right? So we should be getting about $36 for every $1,000 that we have in here. If we go over to our Excel spreadsheet, you can see what our annual and monthly dividends look like. And I'll show you them for different amounts of the portfolio. So once it gets to 15,000, 150,000, 1.5 million. But our annual yield is $54 right now, which might not seem like a lot, but rounded up, that's about $5. So it's actually closer to 4.5 or so. But for purposes of this, we're just saying $5. This is a pretty decent monthly yield. I mean, that's a cup of Starbucks. That is something that you don't have to pay for, that you did the work in the past, you put in the money, and you don't have to look at it again. So that, again, is just the monthly yield. There should be some appreciation. The company should increase their dividends over time also. But right now, just a couple months into this, we are getting $5 a month. Now, if we continue to grow this, and we grow up until $15,000 in the portfolio, that will give us an annual yield of about 10 times that. So $540 a year, $45 a month. That will take 3 years. So not that long, but we will be getting $45 a month. I mean, think about the stuff that you can pay for with $45 a month. Depending on how expensive your cell phone plan is, you can pay for that. Otherwise, you can buy maybe a couple decent meals out for you and your girlfriend or boyfriend, or you can buy, anything that costs $45. Maybe you want a new sweatshirt every month. I don't know. But I will say there is merch down below if you want to check out the My Financial Friend merch. But as you go along, you can see $45 a month is, decent money. For me, at least, that's a significant amount. I mean, I don't scoff at $45. So you can see that's starting to get a little bit more interesting here. Now, if we go for 16 years, we can 10x our money from here. And we have a $150,000 portfolio, annual yield of about $5,400. Monthly yield of $450. Now, this is starting to get interesting, right? So $5,400, it is a nice amount. From there, you can see $450 a month. That also is significant. I mean, that's a car payment. That's pretty much any cell phone plan you're looking at. That's cable, cell phone, car, insurance, gas, depending on how extravagant you live. That can be a significant amount of your budget, right? So that could be all your groceries too. That is just nice to think that after 16 years of just investing $100 a week, we can grow to not have to pay for our groceries. We can grow to, not have to pay for a lot of the daily expenses and not have to deal with it. From there, if we invest for a little bit longer, for 39 years, we can grow our portfolio to about $1.5 million. I realize that this is a little bit longer out, but look at the yield on this. And this is not a super high yield portfolio. This could be higher if we try to move it higher. The annual yield would be about $54,000. Now, that is a really good yield. I mean, that is about the average salary of a U.S. household. That is about what their annual income is. The monthly yield, about $4,500. Think about how much less you would have to do if you got $4,500. Maybe you could quit your job that you hate. Maybe it will just give you some more breathing room. Maybe you can take all the vacations you want and that you've always wanted to take. But $4,500 a month would be coming to your bank account every single month. Now, that is a significant amount every day, too. I mean, when you think about it this way, that's $150 a day, every day. Imagine if you logged into your bank account after a week and you just saw 7 $150 deposits. That would be amazing. I can't wait for the day where our portfolios are that size. Now, I realize that some of these are a little bit longer off, but this is just amazing to look at, amazing to see. I think it really gets you inspired and gets you thinking about the possibilities for this portfolio, and it just makes you want to continue to invest. So let me know your thoughts below. If you want to check out that link to M1 Finance, you can sign up below. It really helps out the channel a lot. So definitely consider that, and consider depositing $100 every week or whatever you can do. But $100 a week is really what I'm really liking. When you look at the time frame, I think it makes sense. Thank you guys so much for watching. I appreciate it. Thank you for hitting the like button, and I will see you in the next video. Bye.